Once we narrow down on a persona that very clearly is in demand, then we work backwards to find the right coach to represent that persona and programming style within the app. We mapped out the entire funnel and went piece by piece. So the first step was creative, then it was, can we get them to click? Can we get to the homepage? And ultimately went through this iteration that resulted in this quiz question flow that we ask a handful of questions to understand what persona we're talking to and to recommend the right program for you. So we had to figure out how to get TikTok learning on the right user. And after a whole bunch of iteration on conversion events, we figured out answers on our quiz that represented the right persona.
Welcome to Subversive, a podcast dedicated to sharing stories from the best consumer subscription apps in the world. We'll bring you lessons for how to grow your consumer subscription business, including insights and inflection points that led to exponential growth from leaders at category-defining companies and innovative startups. Let's get into the show. My guest today is Greg Stewart, the CEO of Ladder, an innovative strength training app that matches elite coaches with teams of fitness enthusiasts based on their unique goals. In today's episode, we discuss how Ladder cracked TikTok as a user acquisition channel in order to grow subscribers by 2,000% over the last 2 years. All right, welcome Greg Stewart to the Subversive podcast. Super excited to have you on the show today. We've known each other for over a year now. I've been a long time Ladder user and now investor, and just couldn't think more highly about everything you and the team are up to at Ladder. So would love to start with just a little bit of background. Let's hear a little bit more about you and what inspired you to go create another fitness app.
Well, thanks for having me. Excited to be here. My background, kind of a windy road to right now. First half of my career was on the finance track. I was in investment banking, working at Goldman Sachs, covering technology companies. Great foundation for learning, great network, but didn't want to be building PowerPoints and Excel for the rest of my life. So took that experience with me. And over the last 10 years have been working on a handful of startup ventures, most recently Ladder. Ladder we've been working on for the last 5 years. Ladder is an app for strength training for people who are serious about their fitness. And we originally came up with the concept and built the beginning version of the product around ourselves as the user. Folks that were already working out, had incorporated strength into the routine, but were tired of thinking about what to do every day. And when you looked at the plethora of apps that were out there, most were geared towards cardio, most were geared towards at home. Very few that had tackled strength training with a North Star of trying to deliver an experience as close to personal training as possible. So we found a pain point as the user. We wanted something to kind of reduce or eliminate the cognitive load of thinking about what should I be doing every day? How can I trust that I'm doing the right workouts to get to the goals that I'm solving for?
Got it. Well, and as a former consultant myself, I can certainly relate to not wanting to spend an entire career building slides. So you made this transition into tech. I know you had a couple of other roles at tech companies before you joined Ladder. And you said that what inspired you to do it, obviously, health and fitness is one of the more crowded categories within subscription apps, but you saw this white space in the market, particularly around strength training. And it sounds like particularly fitness enthusiasts. So people who are maybe going to the gym already or lifting a little bit more than your casual person, just doing a workout here and there. What were some of the early, I guess, mistakes or learnings that led to where Ladder is today? And I know you also launched around the time of the pandemic. And so how did that impact things in those early days?
Yeah, I think and before I hit that, one of kind of our core insights early on was that almost nobody was using software as kind of the core innovation of what they were delivering. Mm-hmm. So most of our peers were simply taking content that either already existed or they were making it and just delivering it in an app-based experience. And that was certainly novel, moving from VHS to DVDs to the internet to on your mobile phone. You could take it anywhere. But nobody was thinking about companies like Duolingo really trying to create and deliver the greatest experience possible that both solves the core use case of delivering a plan for every workout, but also creating these motivational elements that keep you excited, keep you engaged, and wanting to come back for that next workout. We learned a ton the first couple of years. The first 2 years was all hardcore product iteration. We were very scrappy on how we acquired our initial users. We had a handful of coaches that we launched with. They had small followings on Instagram, call it 5, 10, 15,000 followers. and we helped create content with them to help get their followers into the app and using the product. And that gave us a good kind of initial user base to iterate from, learn from, talk to, and really validate that we were onto something and help inform really what the iteration cycles would look like from a product perspective. We locked down the strategy before COVID. So we had the kind of core thesis, the core components of what we would build at the end of 2019, beginning of 2020, before COVID was in our lives. And we were mostly talking to a gym goer and thinking about somebody who had access to full set of equipment, obviously into strength training, but going to the gym. And that obviously wasn't a reality for most people during the pandemic. People were home with very limited equipment. You couldn't buy equipment. Nobody had it in stock. And we had to pivot for that moment in time to make our programming relevant to somebody who was still looking for great strength training workouts, but now had less equipment, maybe consuming this content in their basement, no people around them. Really had to just be smart on how to adapt to that user, working very closely with our coaches and constantly surveying our members to understand what they had access to and what they were looking for to get going. And then we did some really hacky things to be relevant. There was a million companies that were getting started every day in the fitness space because the fitness kind of landscape from the consumer lens was upside down. So a lot of companies trying to capitalize that. Equipment was a huge hurdle. I mean, I remember an article in the Wall Street Journal talking about the kettlebell king of New York. And this is a guy who was going around to defunct gyms and buying equipment kind of piece by piece and selling it door to door in Manhattan. And the reason he was doing that was because you couldn't get anything in stock. All of these equipment companies were set up to work with businesses, not direct to consumer. So it was really hard to find equipment. We kind of scoured the internet for companies in the space and found a partner in one, and we bought $50,000 worth of kettlebells and dumbbells and just kind of held it aside when you couldn't buy any of that equipment in that moment in time. And we used it as a hook to get into the app. So our coaches would tell their following like, hey, kettlebells are out of stock everywhere. We actually have them in our shop. You can get access to our shop if you start a trial. So it was a good hook and message when we had no brand recognition, no awareness of what we were doing to get somebody to open up and download the app and give us a shot.
Yeah, it's such a great story of doing things that don't scale. And I feel like a lot of people these days talk about all the tailwinds that the pandemic generated for consumer apps and particularly consumer subscription businesses. It was great once people had sort of made the transition. But in those early days, it was really a crisis for a lot of people and a lot of companies. And I think what a lot of founders don't think about is those moments of crisis also create outsized opportunities if you're able to meet your customers where they are and serve those really deep pain points.
COVID in the moment wasn't a tailwind for us because the hurdle to launch a new app in the space was very low. And all of the kind of coaches, content creators were flipped upside down and putting all their content on YouTube. So there was so much content that was flooding, and a consumer that was looking for solutions, but very, very hard to stand out, very hard to get the capital markets to notice another fitness app, even if it was truly differentiated. So it was hard in COVID. Our growth has been really exciting after COVID, once the world opened up again and workout environments became more mobile. You know, we see most of our members who were only going to the gym before COVID are now working out maybe most of the days of the week at the gym, but then also consuming and completing workouts at home when it's convenient for them. So we built a product that flexes across environments, which became super relevant after the pandemic.
Well, I know you said one of the ways in which things were really difficult during the pandemic and even the early days after the pandemic was acquiring that initial critical mass of users. And you went through the same challenge that I think a lot of subscription businesses do, which is they go spend money on Meta. And that didn't necessarily work so well. So can you speak a little bit more to that and then how you found your way past the typical playbook into this innovative approach to growing on TikTok that has been so central to your growth story?
For sure. Yeah, we had, I wouldn't call it a growth engine. We had a growth motion that was this organic kind of Instagram, create content with their coaches, have them tell a story to their audience. But that was not a forever strategy. We couldn't grow our coaches following faster than the users we were extracting out of it. And so we knew that there was a shelf life on that strategy. The most exciting moment was when we launched a new coach. You would see a flood of new people. It's a new solution. They're interested. And over time, it goes down. So the opposite of an engine. We raised a seed round in 2021, and we did what we thought every consumer company is supposed to do. And we started investing in Facebook. And we didn't have the right experience or any experience in our team. We made all the kind of wrong choices that you could make. And it was an exceptionally difficult moment for the company. We did spend money on ads. It didn't generate very many users. We hired an agency. We picked the wrong agency. We should never have hired an agency in the first place. But when it really difficult was, this was right around the time of iOS 14, which had the whole world upside down. So the agencies didn't know what they were talking about. It was a whole new world. And two, it was peak COVID. So you had every big brand in fitness aggressively spending to acquire this consumer who is now at home and more open-minded on new products that they would go try. So we spent some money on Facebook. Very quickly, we realized the math just wasn't mathing for us. And we stopped. And we did that for about 3 months. What came out of that, though, was a whole bunch of learning and insights that fueled, what is the product monetization strategy and price point today. All of our users before that moment were coming through our coaches' social followings. And that's a user who has context. They were following that coach. They believed in the authority of that coach. They knew the type of workouts, and they'd already made a decision before coming into the app. So the level of awareness and context were very high. When we started investing in Meta at the time in Facebook, these were users that were probably the right persona, but had no idea who we are, who our coaches were, had no real context coming in. So the first thing we learned was that we weren't really set up from an activation perspective to attract and move through the funnel a user with no or low context. So we realized we needed to go back to the drawing board on how we treated somebody coming into the funnel who was being introduced to us for the first time through an ad. The second thing we learned that was super important was we got pricing wrong. And our price point when we launched was $60 a month. And the way we got there is I have this spreadsheet where I benchmark every offering in our space on a monthly basis, all the way to highly customized one-to-one training. So high performance training, you're training something very specific. You hire a coach. That's the highest kind of ticket of working with a coach or consuming workout content. And on the bottom end, it was free workouts on YouTube. And maybe a little bit above that was PDF content that you would buy from a coach. And we had a one-to-one component in the app at that point, which we weren't really sure how important it would be. We had these coaches on our team. We had a small user base, and we created this functionality where you could text with the coach in the app, not meant to be a friend kind of texting relationship, but more of like an OnStar button, where if you had a specific question, you needed guidance on a modification, or you had an injury, you need to tweak the programming, then there was an expert that would actually respond to you. And we priced the product around that. So we weren't all the way one-to-one. We weren't totally one-to-many. So we priced ourselves on the high end for apps because of that feature. When we started investing in Facebook and interacting with users that had no context for Ladder, we learned that $60 just seemed egregious to them. They were benchmarking us to every other consumer subscription that they pay for. Think about Spotify or Netflix, $9.99, $15 maybe at the high end. So 60 was multiples of that. And number two, they weren't willing to pay for the chat with the coach feature. They didn't really want it, and they certainly didn't want to pay for it. And that was exciting because that would be our most expensive feature to maintain long-term, with a whole bunch of question marks of how it would scale. But we learned that wasn't important to retention. It wasn't important to conversion, and people didn't want to pay for it. So we took all of these insights and put ourselves on a mission at the end of that year to stop investing in growth, have the entire team focused on overhauling monetization. We went through a whole bunch of willingness to pay work with our users, segmenting by level of context who they were. And out of that came new packaging, simpler model, just one price point, no one-to-one concept, and a price point that was $30 a month. So half of where we came out. And we started the next year at a lot more healthy place from an acquisition perspective for a new user coming in. The price point wasn't scary any longer. And we'd build an experience that helped shepherd you through the beginning moments of Ladder to get you through the right first workout in the app as quickly as possible.
Yeah, and I want to get to this innovative acquisition engine that you all have built in a moment here. But before I do that, there were a couple of key points in there for me. One was first, you have to really make sure you've nailed product market fit with the right customer and at the right price before acquisition is going to work, right? Because even if you've chosen the right channel, you might not know it if you don't have the right product targeting the right user through that channel. The second thing, which is more tactical, is I see a lot of consumer subscription businesses just either go and copy the prices of their competitors, which, if you got to start somewhere. And so that's a worthwhile heuristic, but it's just a jumping off point. The next step is they'll run an A/B test in the product. And that's great. And ultimately, you're going to want to run an A/B test. But what I love about what Ladder did, and this is typical, you guys tend to take the more rigorous, no shortcuts approach, is you did the Van Westendorp, you did the conjoint, and you really figured out not just that $60 was too expensive, but why it was too expensive, which turned out to be because your highest cost feature just wasn't relevant to a lot of users. And so then you cut that out and you end up with this $30 per month price point that's much more palatable. So now you've sort of laid the foundation for more rapid product-driven growth. But like most fitness apps, paid acquisition plays an important role. Facebook hasn't been working. So what ultimately led you to TikTok as the right channel? And then we can get into some of the really innovative stuff that Ladder has done to grow on TikTok.
Yeah, in the beginning of 2022, with new packaging, new price point, a lot more confidence in our kind of core offerings and our positioning, we had to go figure out how to grow. We felt like we solved a lot of the issues with the product, with activation, with price point, but we still didn't have an engine that was reliable. We were still relying on organic social, which is helpful, but not a forever strategy. So the beginning of that year, we essentially took every person in the company, and we were little, but we stopped focusing on feature development, which is very abnormal for our team. We're an extremely consumer-oriented, retention-oriented team, but we had finite runway and we had to figure out how to grow. And if we didn't figure that out, then we were going to have to pack up and we couldn't work with each other anymore. So we made it the mission of the team to go solve growth. And we thought about it as an engineering problem set, not just a creative problem set. We mapped out what we thought were growth loops where we thought we had an advantage and could win, where it would set up well with our product, where we could learn pretty quickly and get sign of life without having to hire an agency or do stuff outside of the company. And we started like this rigorous iteration kind of growth loop by growth loop as things were eliminated, moving on to the next. And we tried SEO. We knew that was going to be a long-term strategy, but we found some really hacky kind of MVP courses that helped us get line of sight. And it gave us confidence that there's an SEO strategy for Ladder, but it wasn't going to be one that was going to get us to our next major milestone. And TikTok was probably the second one we started spending time on. We had some experience with TikTok leading up to that, but it was more just dabbling on the side. We had coaches who were very proficient in Instagram and almost no experience with TikTok, but we could see that the consumer was moving to TikTok. So we started spending time on TikTok as users, kind of learning what is the content that is being consumed, how is it being consumed, how is it different from other platforms, and can we create content that leads to repeatable outcomes without spending money. And so I grabbed, one of my coaches, like super smart coach, and essentially we started a TikTok handle and started experimenting on content types. And we have these like very detailed kind of notes that are ridiculous now when you look at these videos, dissecting all of the commonalities of videos that worked, that got to the right person, which you can tell based on the engagement in the comments, and that repeatedly we're getting outlier outcomes in terms of views. So they're getting to more people. And that learning gave us a lot of confidence very quickly. I think the first account we started with a coach, we took it 0 to 250,000 followers in the first like 50 days or so. And that was a couple people on our team just really studying the organic content. So we didn't think about spending $1 on TikTok until we had line of sight on organic to know, one, can our creators win in this environment? Can we get to the right consumer? Can we get them through link in bio similar to organic Instagram? And do we think we can do this on a scaled basis? And that early iteration was really exciting. And we did it again with another coach. And it just gave us a really good foundation on the creative side, which we think is arguably the most important thing to master. It's less about button clicks and optimization. It's more about the creative, the creators, and really understanding how do you create great content that either educates or entertains and gets to the right user repeatedly. So it was all about organic content for us in those early innings, which gave us line of sight and confidence to start experimenting with a little bit of money behind some of that content.
What were some of the metrics or criteria you used to know which organic content you should be pouring more fuel on in order to fuel the paid acquisition loop? And how did you know kind of how much to put behind a given piece of creative?
Well, the how much is very simple because we didn't have a lot of money. So we were trying to put as little, I think the first month or so, we might have been $50 a day. I mean, very light, just to see if can we get people to click the ad. We took multiple creators and started scaling up on the organic side. And what we would look at and dissect really were the comments in those videos. So were they getting outlier views, and were the comments getting to the right people? So if we had a female coach, are the comments men talking about her outfit, or are they women talking about the workout? And you could really quickly see which pieces of content are getting to the right persona that we're intending to get to with that particular creator. And that was enough line of sight to give us, really insights into what the next batch of organic content would look like. And it constantly was being fueled by what was happening on the organic side. On the paid side, we felt like we had enough chops on organic to at least see what would happen, putting a little money behind it. And when we started, it was mostly brand ads. So it looks like it's coming from Ladder's handle, but taking winning content from the organic side. So we would take a winning organic video featuring one of our coaches or a style of creative that worked repeatedly. And we would replicate that into a brand ad featuring that coach, sometimes the identical creative to the organic. And that was kind of the beginning. And pretty quickly we realized we can get people to click the box. We can get people out of TikTok and down into our funnel. So the creative side, we felt pretty confident early on. We have some really smart creative folks on our team. And it's obviously a superpower having these coaches who are creators, who are side by side, full-time teammates working on this with us. So that was a really important part of the iteration. After we felt pretty confident on the content side, we continued to iterate, but we started to shift down funnel, focusing on one moment at a time instead of trying to solve every metric in the funnel, which we tried on Facebook. We were solving clicks and we were solving first workouts and conversion to pay. And it really made it difficult to zone in on one particular problem, go deep before moving on. So we mapped out the entire funnel and went piece by piece. So the first step was creative. Then it was, can we get them to click? Can we get to the homepage? And ultimately went through this iteration that resulted in this quiz question flow that we ask a handful of questions to understand what persona we're talking to and to recommend the right program for you. But even that quiz iteration started as a result of going direct to app and that not working. So having no visibility, having someone go straight into the app versus having them answer some questions, giving us line of sight on who these people are and seeing, because we're having all this stuff spit into a Google sheet, are they getting closer and closer to the right persona? And so we probably spent 4 months only working on the quiz. We had this room in our office where we had all the questions printed out and all the metrics. We were constantly updating it and moving it around to get more and more people through the funnel, and then creating marketing in the middle of those questions to reinforce our value prop based on the answers that you're giving us.
Well, and I imagine that had two important implications. So one is you're improving the product experience for new users. And you mentioned target metrics. I imagine you were looking at things like registration rate, activation rate, trial start rate, trial conversion rate. But then there's the second component that you hinted at, especially in the wake of ATT. If you try to send a user straight into at least an iPhone app, then you're sort of in this black box and you don't have a lot of data you can give back to the ad networks to optimize ad spend. You guys came up with this idea of a web-based onboarding quiz where eventually you're actually able to predict the value of any given user because you're funneling that information back to the ad networks. And so how did that then inform and accelerate your learnings as far as the right ad creative?
Well, more so, we had to figure out how to get to the right people. And at that point, it wasn't casual fitness, because casual fitness, you're competing with huge brands. And casual fitness mean cardio, not strength training. And it's an enormous market. Folks who are maybe going 0 to 1, really heavily leaning into motivation and getting started. That's a really expensive user to acquire, and not one that we were very well set up to capture and convert with our product at that point. So we had to figure out how to get TikTok learning on the right user. And after a whole bunch of iteration on conversion events, we figured out answers on our quiz that represented the right persona. And so we could see in real time, what are the costs of those quiz answers that is being informed every second. We launch a new ad. We know, 10 minutes later, what the initial read is on that ad based on what we knew about the white hot persona for Ladder. So it basically gave us a glimpse and a mechanism to figure out, how do we get to the right user? How do we have confidence that we're getting to the right user? Which creative is getting to the right user? Which creators are getting to the right user? And then going back and creating more of that based on those insights.
Based on what those users wanted. Well, and so then you mentioned that you sort of iterated your way to this fitness enthusiast who's not just the sort of casual cardio person. They really want real strength training. They want to plan for every workout. But then I imagine even within that, because that's a $15 billion US market, there were these different niches that you identified. And there's this tool that you call the Ladder Quadrant for identifying what the most valuable segments might look like. So as this started to scale and the model's clearly working and you've got product channel fit on TikTok, tell me a little bit more about how you identified what those next niches were that you wanted to really go into, and then how you recruited the right coaches to be the face of each one of those market segments.
Yeah, we were fortunate where we didn't have to guess. Like we're also fortunate where we have no pressure to launch a new coach. So our growth engine is not reliant on constantly recruiting and launching new coaches. So it's not a marketplace today. So it's hyper controlled. But because of this quiz, we now have millions of people who are coming through this set of questions who are telling us what styles of training they're looking for, what their fitness goals are, where they're working out, what equipment they have access to. And it gives us really good intel to, one, map them to the right program that we have, or team as we call them. But two, it also gave us insights into where are there holes in our coach roster? What is the market looking for consistently that's coming through our funnel? And where are we not well equipped to service that user? And so we could see at different moments in time, certain modalities and personas that weren't represented in our roster. I mean, a couple of years ago, it was female bodybuilding. We had an enormous amount of leads coming in that were saying they were women looking for bodybuilding programming. They were going to the gym, full access to equipment. And that wasn't a modality that we had on our platform, not because we didn't think it could work, but we had no reason to believe that we needed to launch it. But there was enough demand coming through where it gives us confidence to underwrite the growth trajectory of any new team or program that we would add to Ladder. Once we narrow down on a persona that very clearly is in demand, then we work backwards to find the right coach to represent that persona and programming style within the app. And we're extremely selective. Like, we are bringing these people onto our team full time. So this is not like an influencer coach, tool set. We're looking for coaches who are really smart, want to be part of building something that is bigger than just them and their brand. And that's not the right path for every coach. But our coaches, and we've gotten better and better on how to underwrite coaches. And obviously we've gotten more and more access to high quality folks as we've gotten bigger. But every coach that is brought onto Ladder goes through rigorous tryouts with us. They meet with all of our group heads. So we're trying to understand who they are. We're trying to understand if they're additive to the culture, trying to understand if there's ego there and what they're solving for long term. And then we actually have them program workouts for the week. We give them access to our tools. We give them access to all of the movements we've ever created with all of our coaches. And we have them create a week of workouts. We pay them for that week. The team does the workouts. We rate them quantitatively, qualitatively, and we use it as a gut check to make sure that this coach is extremely high caliber and technical in the modality and persona that they represent. We also do simulated engagement. We have them do intro videos, outro videos, voiceovers, chat engagement to make sure that they have the full toolkit of skills at the kind of foundational level to be successful on Ladder.
Yeah, so you put them through the ringer, and by the end of it, what is your acceptance rate in terms of the number of coaches that start the process, and then how many you get out the back end?
It's very high once we put them through test week, because at that point we've learned enough and there's enough conviction. 5 meetings have happened, like we know a lot. So that is basically it's almost like a code test if you're an engineer, to make sure that all the things that we've learned are true and hold up when we actually put you through real life programming and real users are actually consuming that content. So I don't know. We don't have anybody whose full-time job is to recruit a coach. We launched 3 coaches last year. We over 2.5x the business, didn't have to launch a ton of coaches. We're always looking at our funnel to understand where is new demand to be met. But like right now, we don't have a very specific modality that we're trying to fill. I'm sure that will change as we get more data through the year, but there's no pressure to force ourselves into a recruiting process just to do it. So the hit rate is more on the first, second call on both sides, making sure the fit is there.
Yeah.
And we're where they send us sample programming, we go through all the stuff that they've created. And by the time we get to test week, most folks will make it through that, because we're trying to only put one through test week, given the kind of level of effort it takes on both sides.
Yeah, it's very expensive by the end of the funnel, but it sounds like your filters at the top of the funnel are very efficient. And
it's gotten a lot easier too. Like as we've grown, the audiences of our coaches have grown, their authority has grown, people understand the Ladder brand and fitness. So the ability to cold outreach or have one of our coaches make an intro and somebody pick up, it's gotten a lot easier than it was a few years ago when we were much smaller and had no name.
Well, and that latter part, I think, goes overlooked at times. We talk about the benefits of supply-driven growth in terms of attracting demand. But there's also this element, particularly among influencers on TikTok or Instagram, where if you become a really compelling brand and you're helping creators make a good living, they will often refer the other best creators, like A players want to work with A players. So it sounds like you're getting some of that to supplier referral.
For sure. And it's like, we have, we're nearing 200,000 members and we have 18 programs. So it's infinitely scalable at the team and coach level. And anytime we're going to go out and proactively recruit, we think about it as an extension to the product, like a modality and experience that isn't currently in our roster that we know there's strong demand for and will be a good fit. So we kind of think about it, the Avengers. Each of our coaches represents a unique person, unique persona and training style that they uniquely represent within the app. And so we kind of have the best coach that has gone through our system representing that person, that modality in each of the modalities that we cover.
Love it. Well, so we've talked a lot about how these coaches, many of whom, at least in the early days, were also influencers in their own right on TikTok, are the center of your acquisition strategy on TikTok and now on Instagram as well. But there's another element to the coaches being the center of your core product experience and a big part of why you have best-in-class retention within the fitness category. So can you talk a little bit more around this group-centered approach to fitness and specifically strength training that Ladder takes, and some of the product features or other elements of the Ladder experience that has led engagement and retention to be unusually high in your category?
For sure. And before I hit that, with our coaches, some of them weren't big influencers. Many of them were like, we believe that they could work within our growth engine and we could build a following with this coach using kind of our engine and our team to help them iterate through the creative process. So like we learned a lot of lessons early on that audience size is not a good metric for programming quality, coach quality, or team fit. So it's typically not the biggest followings that we have within our roster. They grow with us, but it's not one of the most important things that we're solving for upfront. First and foremost, they have to be world-class at the programming style that they represent. But to your question, when we built this from the beginning, how we thought about it was delivering a plan. So no guesswork, removing all of the cognitive load. You can trust that you're doing the right thing, and then creating motivational elements to keep it exciting and fresh. And that comes in a few different experiences we deliver in the app. One, we have a concept of teams. Like we don't call them programs, we call them teams. Teams are led by a coach. Again, they represent a unique programming style, a unique persona, and these teams become almost tribal in how they interact. We have space in the app that almost is like Slack groups in each one of these teams with people all over the world who are generally pretty close to your persona, consuming the same workout on generally the same day and interacting with each other in the app, with the coach also in there participating with this group. So there's a real sense of doing it with people like you, not that it's just for people like you. So the community social element is extremely important to us from a retention perspective. These groups are extremely active. And as we've grown, we've expanded those chats outside of the team where we have platform level chats that are topic based. And we look to our members to understand what type of topics we should be introducing. We have pre and post natal, we have equipment, we have supplements, we have music jams or workout jams. All of these like really interesting chats that are unbelievably active with people around the world who are just sharing information and learning from each other. And then we've created
your fitness family.
It's like your fitness family. Exactly. When we survey our members, which we do all the time, and we ask them the biggest unexpected benefit of Ladder, by far the number one answer is making friends in real life. And we're seeing more and more of that happen in real life outside of the app with members congregating and meeting up. First finding each other in the app and then meeting up and doing workouts together in real life. We've created geo chat rooms with every kind of major metro, and people are organizing themselves and finding each other and really celebrating the Ladder experience together, which is really powerful. And then we spend a lot of time trying to understand motivational mechanics of both the social platforms that use all of these levers to keep your attention so that they can sell your attention. And we looked at apps like Duolingo who were using these same levers to help you continue the lesson that you're working on from a language perspective and to keep going, which was super inspiring for us. So we've got a collection of features, whether it be badges, streaks, really gamified elements that make it fun and friendly, competitive from a friendly perspective. And those are important. None of them were built all at once. They've all been built with some insight. That lever could be incremental from a workout perspective, which then is incremental from a retention perspective. We have a feature in the app. If you open the app on the home screen, you'll see avatars at the top. And those are people that are actually working out right now. And the yellow bar on the circle is how far through the workout they are. And you have the ability to cheers members. I think the average cheers per workout right now is 8 or 9. So these are heavily used. And we spent a decent amount of time correlating number of cheers received to long-term retention, which gives us confidence to go iterate on that feature and make it better and help drive adoption. So our North Star for anything we build is always anchored to workout completions. How can we keep you coming back into the app and keep you focused on completing that next workout, which ultimately leads to staying with Ladder for the long run?
Well, and two things I just want to emphasize about what you said there, because I think they're so important. One is you're focusing on the inputs, not the outputs. And I feel like in fitness in particular, it can be so tempting to focus on top line subscribers and subscription revenue growth. But the reality is so many people will start a new fitness regimen in January as part of a New Year's resolution, and then they churn. And if all you're looking at is, subscriber count or subscription revenue growth, then you're going to miss what's happening under the hood. And under the hood, if people aren't engaging and retaining, they're probably not going to stick around the following year. So it's great that you're focusing on number of workouts because that's the leading indicator for everything else. The second thing is, like so many other consumer apps, you've looked to Duolingo for inspiration around these manufacturer motivation techniques, streaks, badges, leaderboards, et cetera. But often where I see that fail is when you do sort of a blind copy paste without thinking from first principles, what's unique about your customer and your product. And so it sounds like you've really tailored these techniques for Ladder and for your customer and your unique product use case. And that has led to much better results.
Yeah, for sure. And like the focus on workouts and product, you can see it in how we treat trials. We don't take a credit card up front. There isn't a single company in our space that doesn't collect a credit card to activate a trial. And when we did that, we didn't realize it was weird, but it felt intuitive to us that if our product is better, we want more people to be in the product. And creating a gate up front, even if you weren't being charged, kind of makes it harder for somebody to come in and try. So we don't take a credit card, and we spend a whole bunch of time from a product perspective trying to get you through those first couple of workouts. I think if you look at some of our peers, most of that energy is going into getting you to pay and getting you to pay an annual subscription, and then maybe caring a little bit less about what happens from a workout perspective.
Yeah, well, and obviously it happens in the fitness category, but I see it everywhere where you can almost infer the scale of a company's ambition and what sort of growth strategy they're taking by how aggressive their paywall is. And obviously it's an oversimplification, but you've got the class of apps, and there's nothing wrong with this. You've got indie developers and small teams that are very aggressive about paywalling the experience up front, and it's a great way to make sure that you're generating some amount of revenue. And if you're acquiring users through paid channels, that you're returning on ad spend as quickly as possible. But it doesn't really scale, because beyond a certain point, you're only going to be able to acquire so many users that way. And the companies that are really going for those multi-billion-dollar venture outcomes, they tend to almost do the reverse. It's like the first goal is get that user to the aha moment, get them to that activation metric where you know they're engaged, and then everything else will follow from there. Eventually, if you're delivering value, they will pay for it.
Yes.
Well, congratulations on all of the traction, all of the success. Where does Ladder go from here? I know one of the biggest questions in the fitness category in particular is there have been a number of apps that have scaled nicely for a little while, and then they sort of hit this glass ceiling and they're not able to replicate the same success they had early on. To the extent you can share, what does the future look like for Ladder?
It's probably a pretty boring answer, but we're spending most of our time kind of engaging with our members and figuring out what do we need to go build to improve the experience, to increase workouts, to increase long-term retention. So we just did a platform-wide survey, and like having chat in the app is an enormous superpower because we have direct relationships with our users. We had 5,000 people reply. The average response time was 45 minutes. So people spend a lot of time with us, and it gives us a whole bunch of ammunition on what we think could move the needle. And it'll inform narrowing down and spending more time with those users to figure out how much of this we should think about in the near term versus the long term. So the product iteration never ends. Like you'll see us looking for new modalities where we have line of sight on demand. We're launching a apparel store this week, actually, and we held off on it for a long time because it wasn't helping us in the core value prop of delivering a plan. But we've gotten to a place where our members are super excited and coming to us and asking for branded performance wear. And so we'll launch a core line later this week, which we're really excited to see what happens. It's nobody's full-time job yet, but we'll go test kind of what the appetite for these sorts of products outside the core subscription are. And then we're always looking for new ways to add value to our members. 2 years ago, we could see that people were tracking their workouts outside the app. They were using spreadsheets, they were using Apple Notes, they were using paper notebooks, and you could see the pain. And so we built basically a product in itself inside the app called the Ladder Journal, which gives us a ton of data on what's happening at the user level, but really consolidated this pain point of having to manage the across apps, but all kind of pointed at the same thing. Tell me what I'm doing. I want to see my progress and what I should be doing next. There are probably other areas outside of our core value prop where having a plan is relevant. So we noodle on, concept of nutrition and just different ways to deliver value to our user where it's already happening just away from us. And there's an interest in bringing that into one home.
Yeah. Well, it sounds like lots of exciting opportunities for expansion, but all rooted in this nucleus of coach-centered, group-centered, team-centered fitness and the incredible and enthusiastic community that you've built around that. One last question I have to ask. I'd be remiss if I didn't ask it. So TikTok has been so important for your growth. Obviously, there's a lot of uncertainty right now around where TikTok goes in the US. How do you think this plays out over the next few months? And how is Ladder sort of mitigating any risk associated with TikTok given the uncertainty?
Sure. Our personal view is TikTok goes nowhere. And I've been communicating that to our team for a long time now. And we were shocked to see that even went down for a little bit, but we were back, basically 10 hours later, and it was performing better than ever. It's 180 million Americans, many of whom are relying on TikTok for their livelihood. There's a new administration coming in, lots of data to process. Our view is whatever happens from an ownership structure perspective, that the product from a consumer perspective doesn't go anywhere. Having said that, obviously we're a smart team and thoughtful and need to be, make sure that it isn't all of our eggs in one basket. Last year, when the initial ban got through Congress and Senate, that we started iterating on Meta again. And we were seeing really strong performance on organic Instagram, because Instagram was prioritizing Reels, and Reels basically became their competitive product to TikTok. So instead of creating content to get to the audience you've acquired, you're creating content to get to new people that the algorithm is serving based on what that content is and who they think will get value from it. So it behaves very similarly. We've scaled that up successfully using the same creator, same strategy, where it's probably, every other day it's Meta more than TikTok in terms of where leads are coming from. So what we've gotten really good at is understanding our core user, what they care about, how to create creative that's relevant to them, and short form video. And whether or not TikTok is here for good or not, short form video is not going anywhere. It's what the consumer prefers, at least for the time being. And we build an entire motion around that that's agnostic to platform. But we're experimenting with other channels as well. Our organic growth is growing as we've gotten bigger. More and more people are talking about us. We've built a PR motion internally within our team to amplify our reach outside of just our owned audience. That has been paying dividends. And we're investing more and more in brand as an amplifier to our story, really trying to create a unique message versus our peers in really high quality, compelling brand content that has helped bring in a person that might not have known or been conscious of ladder before that campaign.
I tend to agree with you. I don't think TikTok's going anywhere, but even if it does at this point, you've sort of expanded beyond being overly reliant on TikTok for growth.
Without a doubt. And the attention goes somewhere. Yep. I mean, we saw it even in those 10 hours. You can see Meta started to really perform from an organic and paid perspective. So the attention will go somewhere, but our personal view is something gets worked out that satisfies the requirements of the US government, and the consumer won't really feel the difference.
Let's wrap up with a quick lightning round here. So I'm going to ask you a few questions. You can respond with, a brief sentence or two. The first one, obviously you're biased here. You're the CEO, but what do you think is the best thing about working at Ladder? And if you could change one thing, what might you change?
I'll do two best things. One best thing is people are getting real value out of this. If you read our App Store reviews, we have 60,000 App Store reviews and we're surveying members all the time. It's life-changing. I mean, the product is delivering extreme value for folks and it's impacting their life in an extremely positive way. And that's amazing. You read these stories and it's absolutely incredible. It'll make you cry. If I'm ever lost on my way, all I do is go read App Store reviews and feedback, and it immediately grounds me in what we're doing. I think the second part is I get to work with my friends, and we have a very small team for our size, not much more than 20 people, but a good core of us have worked together for, 10 years, multiple ventures, multiple failed startups, and to have one that's really delivering value and growing and that we're proud of and using ourselves is amazing. I mean, you get to go to work excited and there's no problem you can't tackle because you trust the people that you're working with. What I would not like, I'm really excited to not answer the TikTok ban question ever again over time. And it would come in waves of the last few years. And my response to investors was, it's working today. And growth is not working for a lot of companies in our space. And the habits that we've built are extractable well beyond TikTok itself. So that's just been this buzzing narrative that I have to stop and put together smart thoughts and articulate that we are not just a TikTok business. We build the most retentive product in fitness. And that's what it is at a core. And we're really good at finding people who are relevant to that product. And TikTok has just been one place that's effective for us in doing that. I thought there would be a lot of inbounds on the TikTok stuff, but this was the quietest one. I think the trust is there on they'll figure it out. They'll figure out how to go capture the right attention somewhere else. So I feel we built enough trust and track record the last 5 years to figure out hard problems and get to the right people regardless of where they are.
Yeah, well, and it's not your first time going through a major curveball. I mean, you mentioned COVID, and so that certainly builds trust. Next question. So you mentioned you started your career in finance, similar to me. I started my career in consulting. And then even though you've been in tech for a decade now, you didn't have a lot of experience in fitness prior to starting Ladder. And so what's an advantage and disadvantage of being a relative outsider in the space where you're creating new technology and new products?
I think it's an enormous advantage. We have expertise in our coaches who are world-class at what they do. And so we have experts that are around us and we're constantly working with to improve the product. But it gave us a blank sheet approach to how to build this. We had no preconceived notions of how this should go, other than we were all fitness consumers, like not building a business, but fitness consumers. And if you think about most companies in our space, think about the gyms, the entire business is predicated on you buying and not going. So paying and not going. That just didn't feel like right to us, like the right way to build a company. So I think it helped us like come in with a completely fresh perspective on it should go like this, because we think as the user, this will be great. And then we've had just a ton of interaction with our members to learn from and iterate on over time. So I think it's a good balance. Like before this, we spent a lot of time in real estate tech, and bringing on traditional real estate people was never the right call. It was bringing on really smart people who understand how to solve consumer problems, can work backwards, bring like an engineering mentality to problem solving, and could very quickly learn a new industry using first principles as a guide versus all of these views of how things should go or how things are done. Yeah, we generally don't follow that path and try to avoid that trap.
Yeah. Well, and real estate and fitness are probably two categories that have been entrenched long enough that there's a lot of groupthink. And so there can be some real alpha to thinking about things differently from first principles. Okay, a couple more here. Besides Ladder, what's your favorite consumer subscription app and why?
Maybe most you. None of these would be like super groundbreaking. Like most use Spotify, I use it every day. Like if I'm working at my desk, I've got Spotify on. So that's a product that's probably highest on my list of usage outside of our own. Duolingo is amazing. We spent a lot of time both getting to know prior Duolingo teammates who were around the early chapters of that venture. There's a ton to learn from that company. And so we spent a lot of time in Duolingo, and it's just a terrific product. And obviously TikTok changed the game from a media perspective. Like TikTok is not a social platform. It looks more like TV in terms of how content is consumed. And now it looks more like search than anything else. So TikTok has totally changed the game from a content perspective, content consumption perspective. So those three are heavily used within our team for sure.
I mean, I'm right there with you. I may have to stop asking this question because the number of times Spotify and Duolingo in particular come up is remarkable, but there's a good reason for that. They've done an amazing job. If you could go back and give yourself advice as a new founder, what would it be?
That's a good question. Advice to a new founder, I would say you have to be black belt at growth and product, which we didn't know in the beginning. Like we were really good at product even in prior ventures. We knew how to extract information from a human being and turn it into a product that people love and use. What we didn't really understand is how hard growth is, especially in this category. And it just doesn't get figured out. So I made all the wrong choices we talked about, where I thought I hired smart people, from an agency perspective to just solve this for us. And that was just not a recipe for success. Like we have gotten equally proficient at building products and finding the right people for those products. I am still the guy in TikTok who controls Ads Manager every day. And we're very active. So like I didn't come from growth. I don't come from performance marketing. We just had to learn it. And we spent a lot of time, learning it from the ground up, again, without any preconceived notions of how these things should go. So I would say like, it's not all about paid ads. Like paid ads work when you have a really good product and a consumer that stays with you and a really good understanding, a unique understanding of your user, where you can speak to them, where paid and investing in growth really works. But the equal importance of those two things, I think, has become extremely clear to us through living through the pains of not being proficient at both at one point in time.
Well, and I'm glad you learned the paid ad lesson early and lived to tell the tale, because there are a lot of consumer subscription apps where that ultimately ends up being the death knell when the unit economics don't work anymore. Last question: how do you believe AI will impact the fitness category over the next 2 to 3 years?
I can speak from our lens. Like we're using AI in every area of our business right now. So like first and foremost, we've been able to keep the team small. We don't have a single person on our team whose job is to be a manager, or who is a manager more than half their time. And that includes me. So it's given us a ton of horsepower outside of humans to go build this business without over complicating kind of the human resource side of it. That's been huge. Like our view in what we're delivering, like we believe in the power of human connection and human motivation. So the face of our coaches, it's not one-to-one, but we create experience that feel very personal. To deliver that on the back end, we're using AI in everything that we do. We just launched a feature called workout modifications, which lets you swap in a movement based on some criteria that you're giving it. But it is learning now across all of our programs, all of our teams, every movement to get better and better at the right movement to prescribe that maintains the integrity of the program and that's designed by the coach. There's no way to do that from a human perspective. So we're using it in every inch. I think for us, it'll enable us to deliver a better and better experience that is disconnected from just growing the team to go support those different use cases as we expand. So we have a person on our team who's only working and thinking about AI. So we've already invested in it. It's become an enormous component to our business. I don't see that changing.
Cool. Well, that's great to hear. And thanks again for coming on the podcast, Greg. It's been a pleasure as always. Before we wrap up, any final thoughts you want to share or any requests for the audience?
I would say try the product. There's no credit cards. There's no downside. And if you need validation, we're in the Wall Street Journal today as the number one product in our space. So I'd love for you to try it. Joinladder.com.
Thanks again for coming on, Greg. It was a pleasure. And I used the app this morning and had a great experience, and we'll be continuing to use it for a long time to come. Thanks again.
Thanks so much. Appreciate having me.